Welcome to the Finance Magnates London Summit, Day 3. The action is on, and we're here with Schepper, CMO at Swissquote Bank. Hi, how has it been so far?
It has been very good.
Great.
As every year. A lot of prospects. No, we are happy to be here.
Amazing. So Swissquote Bank is unique in the sense that it is deeply involved both in the retail and the institutional space. And it is also known, the way I see it, as being at the forefront of innovation. I still remember you were the first to launch like smartwatch trading and stuff. So my question is, this year we've seen cash products and interest rate products gaining traction. What do you see as the instruments or products that will define 2024 in the retail space?
That's a good question. I think in the retail space, what we see is on the crypto side. I think with what's happening on the Binance side, what is happening with the ETFs, which are probably coming soon, with the Bitcoin halving. So there is a good story to tell that could bring new dynamics to this market, which was in a difficult situation. I'm optimistic.
So you share the view that the crypto winter is dead?
It's a bit early to call it dead, but I think we would gonna see a spring, and the spring will probably be at spring at the latest. So in that sense, we are optimistic for the crypto assets in the futures.
I see. Okay, we'll have to wait and see how it plays out. 2023, however, was a tougher year, I think, for many brokers. We've seen consolidations, we've seen redundancies. Is it something you felt from clients on the retail side? Have you seen like limited, on the retail broker side, have you seen limited budgets? Anything change in their strategies?
Yeah, of course, it has been a difficult year for our clients. Because there's a lot of uncertainty and geopolitical situation makes it difficult to have a clear outlook where the market is going. The days of volatility have been low, so there were not these spikes that clients like to take positions. So of course, this is not an easy environment for any bank or broker, but our advantage is that we are a bank, so we have the client deposits. And we can offer to the client basically interest rate product. We have structured products that we do ourselves. We can sell fiduciary funds. So we have solutions for our clients for all market needs. And that's, I think, that makes Swissquote different to all the others.
Yes, many brokers have rediscovered themselves as banks, quote unquote, with interest rate. But you're already there. Other brokers, however, took a different path and started flirting, let's say, with prop trading, which is gaining huge traction. You could see it here in the sessions. I know some of the camera crew is involved as well. But my question is, how do you see this new, not so new maybe, but this evolving space? Is something that brokers should look at or stay away from?
No, we are regulated. We are regulated in Switzerland and now places where we are, and we are listed on the stock exchange. So we are very careful, basically, the way we do business. It is true that when you look at the prop trading, everybody says he's doing it seriously, but when you look at it, how it has been done, unfortunately, there is a lot of actors which don't do it seriously. So it is something. We are looking at it, but honestly, so far it is
not on the table, not in the cards.
Exactly. So.
I see. And another hot topic here was, and this is more in the B2B space, risk management, precisely because volumes are subdued and toxic traders are more significant. Maybe. What is your advice for an upstart brokers? B book, A book, hybrid?
I think for brokers it's important to deal with liquidity provider who have good execution, who have good quality, who are there in all market situations. And I think here Swissquote is also perfectly positioned actually to help other brokers to give the liquidity that they need. We know a full B-book model is of course dangerous when the market turns, and of course I would actually recommend to have a combination, a hybrid mode for a broker. I think, but the full B-book model, this is not something we recommend to do. I think it's important to have the reliance on deep liquidity as we can offer.
Okay, so to finish off, Jan, you've been here many years. How do you see the industry evolving throughout the London summits, coming here year in and year out? What do you see has changed?
Yeah, actually what changed definitely is in terms of regulation, of course, what ESMA has brought, now the Consumer Duty Act in the UK. So of course this changes the business because it has become more complicated. The framework is different than it was a few years ago. So this probably will lead to more consolidation in the space on the one side, and on the other side, unfortunately, there are actors that have set up offshore entities and then actually are bringing the flow to the offshore entities, and this is something I think is an effect of the regulation, which is not in the sense of the consumers, basically, which is the opposite. That the regulation. So I think regulation is important. We are fully behind regulation, and we are very well regulated. But if the regulation is there to kill the market completely, I think the opposite effect that the regulator wants can unfortunately happen, and this is not a good thing for the industry.
So it's a mixed bag. Regulation can be. Any last piece of advice for brokers here?
Yeah, I think for the brokers, what is important is to be ideally multi-asset, so that they don't rely just on CFDs or on Forex, so that they can also offer to their clients direct investment in the underlying, in ETFs, in stock, in fixed income products, in crypto assets. And here again, this is
good to have a bank around.
We have a bank around, and I think this is really, really key. It's really about, and we have seen that the biggest learning this year is with FTX, with the banking crisis in the US, so that it's really, brokers should look at their partners. They should look at the balance sheet of their partners, at the liquidity ratio, at the equity ratio, and to deal with really solid players. I think this is really the biggest advice I can give, because it's really crucial, because at the end, it's the existence of the business that depends on that you rely on partners you know will be there in any market situation, because now it is very calm in the market in terms of liquidity, but it will spike again. And we don't know when it comes, but then you need a partner who is there and who is solid and will not let you down.
And we'll see who is swimming naked.
Exactly, we will swim that. But I can guarantee we will be the guys who are not swimming naked.
For that, I'm sure. Thank you very much.
Thank you.